Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 17th of June. Now, a quick end of North American session wrap up, just to get you tuned up for the upcoming sessions, because this is where the action is going to be now. Big moves, obviously, across the board. This is what you're going to see, and it's been a long time, right? We've been waiting for this for ages. A central bank to really kick into gear. Now, the Fed have brought forward their projections for interest rate hikes to 2023. I think it's at least a year earlier. Now it doesn't seem like much, but in the scheme of things, it's very supportive of the US dollar, and you're going to see, I think, a medium-term run in a US dollar strength, right? This is just a starting point. Now, the currencies, you've got to be very careful here, because when you are looking at the technicals here, and I'll come back into the key components of what's happening on treasuries and equities and these sorts of things, but the currencies have bolted, right? They have left the building. So what you're going to be looking for is some sort of level of retracement on these pairs to get into the trade, right? This isn't a overnight sort of flash in the pan move. This is the central bank telling you they're going to change policy at a certain date, and that is being factored in right now, and that's what happens. So with that, you've got to sort of gauge where to get in. Now, whether you average in, and by that I mean you get into the trade, you stagger your entries. So, the idea is you don't put all your eggs in one basket. You try and get in with small positions as it retraces, or even potentially as it keeps moving. Now, if I just give you a look at the where the equities and everything is, I'm a little bit surprised the equity markets aren't a little bit lower than that. I know they've only brought the forward projection by a year, but there's a few other changes, subtle changes to their statement, which take away their concerns about the economy and these other things. Equities should continue lower. The bond yields are higher. Okay, the price is a little bit lower. So you'll see those going up. That's supportive of a US dollar as well. So the dollar block should get hit. The dollar rallies, and equity should come off as well, right? So that's the way of it. Now, one way, I was just showing you the charts here on an hourly perspective. What you should be looking for is coming back and having a look at the strength on a daily basis, right? Now, if I just change screens here, get you onto the other charts. Okay, so you're looking for these major levels. Now, the dollar index is coming up to one. That's, to me, a potential good entry. Euro still within, it's approaching a good entry, I should say. Sterling is one of those pairs that has broken down already. So is the Aussie, and so is the Kiwi. Dollar CAD still got a bit of a way to go. Dollar yen's just breaking, and you can see dollar Swiss, it's got a lot of work to do. It's to make its way back up towards 94. So to me, dollar Swiss isn't the best pair. Dollar index for sure. On your watch list, dollar CAD. Well, the thing is, dollar CAD, right? I expect the dollar to go up, but oil's at $72. That puts downward pressure on dollar CAD. So it's going to be a bit of a harder battle for dollar CAD to get going. So I'm not looking at that just yet. Dollar yen for sure, and euro. The other pairs, now this is where you can sort of structure your plan, is like sterling, Aussie, and Kiwi. You've got to look for retracements, right? Getting in down at these lower levels is problematic. And I was saying this just yesterday. If you want to have a look through the video, there's some key pivot lines here. Now, sterling's got one here, just around 140 the figure. This could be a potential good entry level. 75.30 in the Aussie, and also just around 71 the figure in Kiwi. Now, these could be retracement levels for you to get back into, and actually even dollar CAD, that's probably potentially a better opportunity. I expect dollar CAD to come back a bit, but clean break trades, dollar index, euro, they should go at the same time, and maybe dollar yen, right? So plenty to play for. You come back and piece it together. Now, there are a few other things coming out this week, but when you are looking across the board here, we are looking for, let me just get the currency strength page up. You're trying to identify where there's an easy entry on some of these currencies, right? So you look at the dollar, okay? So have a look over the course of the next day, like euros at the moment. So this is where we've actually just gone through the transition of the roll, the New York roll, where all the, unfortunately, all the percentages and all the moves are reset. You'll see through the course of the day, the US dollar will be rallying against all pairs. And when you see this all blue, it's going to tell you that there's very clear dollar direction. Now, this has just changed, as I said, with the reset over the 5 p.m. New York, the roll, but don't get confused with that. I think the signal will be very clear from here. We are looking for retracements or to get into a strong dollar move. That's where the action's going to be. Have a look across global equities. It's going to be interesting to see how this plays out. US equities obviously lower, but not much. This is like a tiny move in comparison. Keep an eye on the US equities as we go through the Asian session. That's where the upcoming move is going to be reflected first. That should then correspond with moves in the Asian and European equities. Bond markets, well, it's good to keep an eye on all the relative bond markets. And as you can see, the yield's higher across the board. Prices, so when it goes red, it means the price is lower. Price is lower means the yield is higher, right? So check that out. It's pretty obvious what's happening there with the bonds. And this is going to kick into gear. Don't forget, this isn't just like a short-term fix. This is also going to kick into gear a lot of other central banks. It should ignite the RBA, the Bank of England, the ECB. They're trying to do their best. All those central banks that aren't really doing anything at the moment, it will really push them forward. All right, guys, this is, to me, it's pretty exciting times, right? You start to see the Fed making some decisions. We start to get movements. And the most important thing is we start to see clear trending markets. The dollar should be going up. Let's look for the opportunities. And just as a bit of a recap through that Asian session, this is where things can get doubly super cool. Like today, we've got Aussie employment numbers. We get weak employment numbers in Australia on the back of strong sentiment on the US dollar. The Aussie should tumble pretty quickly. And the other thing is too, this dollar trend isn't going to change. So if we get really strong Aussie numbers, we get a retracement in the Aussie. It gives us a better level to get short. Okay, that's the way I sort of look at it. And then as you go through, you've got the Philly Fed business numbers, etc. The good thing is over the next 24 hours, there isn't a huge amount of stuff coming out. So the market will ponder what the Fed has said. They've already started to put those positions in. There's big clean outs across the board, and I expect these to continue. I can see at least another couple of 100 points across the board on these pairs over the coming week, right? May not happen straight away today. I mean, it's already gone a long distance, but a retracement, continued move in that direction is the way the markets are pointing. All right, guys, have a good one. All the very best. Cheerio.